Welcome back to CEO Money. I'm Michael Yorba, your host. Thanks for joining us. All right, we've got Brian MacMahon, founder and Expert Dojo, expertdojo.com. I just love the name of the company. They are taking companies and showing them how to conquer the world. So, Brian, welcome to the show. Thanks for being here.
Thanks, Michael. It's an absolute pleasure to be on.
All right. Give us some background on yourself, and then I want to dive into Expert Dojo, how you find investments, how you build and grow a business, and the Accelerator, the startup, the international Accelerator, the investments, and why companies fail, most important. We've got two segments. Don't worry about rushing through it, but let's start with you.
Wonderful. Well, a little bit of background about me. I'm a lifelong entrepreneur, like the last 25 years. I feel absolutely every single year of it. And I've lived in about 35, 40 countries, of which I've had a presence in every single one of my previous companies. I decided to open up Expert Dojo about 6 months ago when we decided that we wanted to actually see what we could do to actually help the startup community get a little bit stronger and actually start investing money into those companies.
Okay, when you invest money into those companies, is it coming from a fund? You're doing it personally? Is it crowdfunding? How does that money come into the companies? You really hit a hot button with me.
Yeah, well, initially we do it ourselves. And when I say we opened it 6 months ago, we actually started researching on startups about 4 years ago.
Okay.
And we opened up a space in Santa Monica on top of the mall. And at the beginning, it was really just to understand, why do so many startups fail? Why do we have a situation where of 100% of people who are actually looking to start up a business, 97% of those in the tech space are failing every single day? It's just a crazy, crazy, crazy statistic. So we started off to understand. We had no model. We didn't give any money. We didn't give any coaching. We didn't ask for anything from the startups. We just allowed them to come into our space, and we dissected them. We then spent the following 2 years building training programs around those startups to try and see if we could actually work within some of those areas that we felt was a problem. And then about 6 months, 8 months ago, we decided let's actually start putting our own money into the startups, small amounts, $25,000, $50,000, to actually help those startups hit that really difficult pre-seed stage when they need the money the most.
Yes, and well, the guidance is big because you can come from all of the other, the population of companies you've gone through and say, whoa, you're going to blow up here. Don't do that. That is invaluable.
Yeah, look, as an entrepreneur, it's incredibly difficult. To start a business is one of the hardest things you'll ever do in your life. And the challenge we have is nobody prepares us for this, right? It's not like we learn in school how to be an entrepreneur, or somebody trains us about branding and product fit and market validation and how do you find users and how do you get profitability. This is all absolutely brand new. So we feel the mentorship is huge, and we feel the coaching is huge, and the training is huge. And then once we get people beyond that level, then we want to focus entirely on making sure that they have the money to get them, not just the level that we actually give them the money for, the 25, 50K, but then to be able to go to the next level after that and raise $500,000, $1 million, and whatever else is needed to give them a good chance of being successful.
Okay. The company, when you invest in the company, obviously you're an equity partner from that point on, so you're vested, and you've got a real good reason to get them all the way through the various other forms of capital formation. Am I correct?
Yeah, absolutely. I mean, we become owners of those companies as soon as that's the beautiful thing about equity.
Yeah.
Is you're just all in, right? If you're charging somebody for a service, i.e. you're doing consulting on a monthly basis, it's fine. If the company succeeds, they succeed and you look really good. If the company fails, well, no harm, no foul, you tried.
And I got my commission.
Yeah, exactly, because I got my commission and everything's okay. And I know people don't feel like this, by the way, and I'm really generalizing. I don't mean to. But when you actually take equity in a company, it changes everything. Now you're in a position where the only thing that matters is that company reaching a successful conclusion. And a successful conclusion means that they get acquired by another company or they become an IPO.
Let's talk about how to build and grow the businesses. What are some of the real the milestones that you say, listen, first you've got to do these simple things and do them well before you start getting tricky and going down the road and try some of this other stuff, right?
Yeah, well, firstly, it all begins with brand. You have to have an amazing brand. If your brand is not amazing, it's all over. And too many people bypass that, and they go directly for some kind of lean startup strategy, such as just building it and then reiterating it as you go along. So the central core of everything we do at Expert Dojo is about building a phenomenal brand that's difficult to repeat elsewhere. So if we look at some of the great brands out there, whether it be Virgin, Patagonia, Tom's Shoes, like just great, even Amazon is a good example, although there's some bad stuff there too. But build a phenomenal brand. That's at the beginning. And you build that around your product. The next thing you do after that, and we call these circles of influence, the next thing is you expand your circles of influence now beyond your brand so that you now start to build a phenomenal team of people who want to work with you and they believe in the movement of where you're actually going to. And then alongside those people, you're also building a design whereby the user experience is absolutely phenomenal. And then you go to growth. Then you go to making sure that you got investment built around what you have. Then you make sure that you start building a moat around that so you got a strong company. And then you're in a place that you're defensible. And for that first 18-month period while you're building all of that, you move like a ninja.
Give me a little space. I'm going to take a commercial break. We'll be right back. You've been listening to Brian MacMahon, founder, ExpertDOJO.com, on CEO Money with Michael Yorba. We'll be right back. Welcome back to CEO Money. I'm Michael Yorba, your host. We've got Brian MacMahon, founder, ExpertDOJO.com. All right, Brian, our phones kind of went a little funny on the last segment, but I want to bring you back. And let's start again from how you take the basics and then move these companies, move these entrepreneurs into the next step. And, you know, just like it says on your website, we help entrepreneurs build an empire. I want to know all about that.
Okay. So look, it's about starting from the right place. We believe that a huge reason for the very high failure rate within early stage entrepreneurs is that people try and move too quickly at the beginning. You know, there's a lot of books out there, Lean Startup amongst others, which suggest that you just go directly for your product and then you just keep reiterating until your product is perfect. The challenge with that is it kind of goes against the way great American businesses were built in the first place, which were always built based on building phenomenal brands that people believe in. So we believe the brand is the anchor of everything. You build a differentiation, something that makes you uniquely different to everybody else. And although that will change and it will move forward and it will evolve, you need to have an anchor at the beginning to get it going. Now, as soon as you have that brand, you now have the beginnings of a movement, of being able to get people galvanized behind what you're trying to get together. So when you can't really afford to hire people at the money that they're worth at the beginning, they're prepared to come with you because they believe in the brand and the movement that you have. And then once you've got those people, you then focus entirely on making sure that your product, your brand, and your people are creating a very strong human-centric design so that customers, consumers, people coming for your product or service, they have the easiest possible way of finding out why is it important for them, what's in it for them. And then once you create that, you make sure that obviously your website and everything, IT tech is built around that. And then you focus entirely on building your users. We actually, funny, over at the dojo, people will start with us, and on the second day, we're already trying to get them to focus on what milestoning, what their customer journey is going to look like. So how many customers they're going to have in the first month, second month, third month, fourth month. We make it like that becomes the absolute focus of the first thing they start every day with. And look, if you do that, if you build a great brand, if you build a really strong team around it, which fills the skill gaps that you personally have to make sure that your brand is successful, if you make sure that you're true to your product by thinking of the customer first and having a great customer-centric journey, and if you milestone the amount of users, revenue, prospects, and activities that you need to do every single day, then your chances of success are way higher than if you just think, hey, man, I'm just going to Nike it.
How? I'm going to Nike it?
We hear it. We hear it. I'm just going to do it.
Okay, I'm just going to do it. All right. How many companies have you guys been able to get your hands on to work with them, mold them, and then set them on the road to success?
We work with about 400 companies a year, and then we deal with either investments or equity stakes, and we did about 14 in the last 18 months. And we're expecting to invest in about 100 companies between now and the end of 21 here in China and also in Israel.
I was going to ask you that, are there any borders here? So no, it's wherever they come in from.
Yeah, absolutely. There's great technologies everywhere, and it's about companies. And if you think about it, it's a little bit, it's unfortunate that not only are we not trained in entrepreneurship, but we're also not trained in global economics. Like if we build a great business and a great brand and a phenomenal team and an amazing human-centric design, it's kind of really sad that the only place we're selling it is our own local town. Because in the end, we're all the same. I mean, we may have cultural differences. There may be borders that stop us from knowing, and maybe language barriers as well. But really, the actual experience that every single one of us want on this planet is very similar. So why should we not be able to go into all those different places too?
I agree 100%. What's going on with this Expert Dojo Startup Accelerator, the 17th of April through the 26th of June? What's that all about?
So we've got a bunch of fun things happening. We have an accelerator that we bring companies through. It's a very specific program. All of the things I mentioned before, everything from the brands, the product fit, how the product tends to look, how they then find users, and then bringing them to a stage that when they're looking for that follow-on investment, which is bigger than what we can offer, people are prepared. You know, they can actually speak the language the investor needs to hear based on doing a little bit of work as opposed to just having everything very hypothetical. So we bring them through that. There's another thing we haven't mentioned yet, which I think is really exciting, and that's that one of our LPs, one of our limited partners, and any fund like ours or anybody else's, it's always made with what's called limited partners or general partners, and they're the people who invest money in the fund so then we can then invest it out to entrepreneurs as well. Mm-hmm. Now, we have one particular guy who said, look, I want to do a competition. And because we're on top of the Santa Monica Mall, he's going to put $1 million as a cash investment prize into 5 startups. We haven't even launched it yet, but on the 8th of May, we're going to launch it over in Tech Day. So it's going to be a bunch of fun. We're going to open up the dojo, which is an 8,000 square feet space on top of the Santa Monica Mall. We're going to create a Shark Tank type environment in there. We're going to have judges who will all be investors. And we're going to invite anybody, anywhere, no matter your background, your culture, your color, your gender. We don't care. We're looking for the next $1 billion idea, and we bring it in, and 5 companies will walk away with investment after a 3-month period after we've gone through everybody.
That is brilliant.
Fun, right?
Yeah, it sounds like a lot of fun. I'd love to participate with you guys in that because
I might pitch.
What? You might pitch?
I might pitch myself.
That's good. I mean, why not? What the accelerator, the startup, the international accelerator? I mean, is there some differentiation here between a domestic U.S. accelerator and international? What is it?
And I'll tell you what it is. We're holding government. So if I give a very brief background, I know I don't have a huge amount of time, but my whole journey here, this started off for me as a hobby. I've had a number of businesses. I did fine. I arrived in L.A. I noticed all of the startups failing. I wanted to understand the challenges, and I realized that there were a few of the challenges we could fix pretty much straight away, such as toxic relationship between investors and just normal people. Like all of the startups getting money just happen to be just very well-to-do kids who happen to go to really nice colleges, who happen to be really well-connected. It's just an unfair reality of the world that we're in. Mm-hmm. And I wanted to be a part of fixing that. I also noticed that our community was very lacking as far as supporting and helping early-stage startups. Now, what does that mean? Does it mean that our corporations are terrible people? No. Does it mean that our governments are terrible people? No. But the support system is extremely poor. And if we look at places like Israel who do it really well, they have support systems whereby the local corporations know that they have to support startups. It's not a question of, yeah, I might just support a startup if I feel like it on a Friday afternoon. They know that the entire creative well-being of the entire economy is based on them supporting startups. And so we started working with governments thinking, at the beginning, we kind of ignored them and thought, let's just build startups from within. Let's get the startups working together. Let's build our own community. And then together we will all be stronger and all ships will rise. But then after a while, we realized, let's actually start speaking to the local governments and teach them how to create great startup ecosystems, as opposed to just building 1 or 2 shiny buildings and saying that they're supporters of startups. So that's taken us internationally. We've done a bunch of work with South Korea. We've done a bunch of work with Italy. We're working with about 5 or 6. It brought us over to China. We're also working with Israel on the same thing. Like, it's brought us to all these countries, all these governments who are all facing the same problem. They know they want to help because it's a vote winner and because it's the right thing to do for their economy, but they don't know how to. So the same principles that we build here within our local communities apply in all of these governments. So we're helping both the governments build their own startup ecosystems, and then we're also helping the startups from those countries, like the great startups with the phenomenal ideas, come over to America, launch their ideas over here, and then expand their product as an American product.
That is a brilliant network. I mean,
It's fun.
yeah, well, it gives you all kinds of access to things that normally you wouldn't get from just the commercial side of this. I mean, when you bring in the government, you have all kinds of support systems that you can. Well, once you get them educated to the point of how to integrate with you, then I can see that this is a $1 trillion idea.
Yeah, it's fun, and the other thing as well is it really helps our startups here in America. Like we're absolutely dedicated to startups in Los Angeles. This is where we started. These are the startups. If we love all of our children, these are the ones that we love the most. But we also realize that when you have a startup, it's a question of adding all of the pieces together, or putting the jigsaw puzzle together. And a lot of those puzzles are outside our control here locally. So, for example, a lot of our startups, they do manufacture in places like China, and they're getting murdered right now. So maybe one answer is, put it all out of China and then have them pay 2 or 3 times a higher price and be disadvantaged. But another answer is make sure they don't get destroyed in the places that they're actually making the product, so that they can have the right product and they can survive as a business. So we see all these bridges, and with Israel, the phenomenal technology that they have over there that's needed by startups that we have here, in Europe, for the fintech space, taking great companies from the UK. So by getting everyone together, working just as one unit, trying to all push forward at the same time, it's super powerful.
Yeah, what you're doing is you're creating a public and private global ecosystem that's based on startups, which is really a hot spot right now, because I know there's a lot of people that have been in blue chip investment stocks to just get a general name on it, and they're looking to move things around, and you get a real big bang for your buck by being able to find the next unicorn. If you can find a place that delivers the next unicorn that also has connections to scale it into an enterprise end solution, if you will. I mean, and that's what you're doing. I applaud you for that. Right?
Yeah, you are not wrong. And then as investors, so I always say at the beginning, this is a little bit like cryptocurrency. I just say, look, just be really careful when thinking about investing in the startup space, because it is a space of insiders. The people who, we work with 400 companies a year. I probably look at about maybe 10, 12,000 companies a year in one way or another, or through one or two of the guys in my team. So I have the advantage of probability of just based on the amount of startups I've seen. So if somebody coming in cold into a startup space and then saying, I see this dating app, it could be the next Tinder, don't do that because there's a lot of variables that come into this which are outside the control of just you seeing an awesome startup that are putting together a brilliant business. And that comes from knowing the space. But if you know this space, I don't believe right now today there is a better opportunity to become really, really wealthy. I mean, look at Jeff Bezos. To forget Amazon, Jeff Bezos was one of the first investors in Google.
I got it. Brian, we got to go, but I'm going to be in touch with you real quick.
I love that. It's great. Listen, if it's about startup, I'm always here, whatever you need.
You got it. I'll be in touch. Thanks, Brian.
Okay, thanks.
Brian MacMahon, founder, Expert Dojo, expertdojo.com. We're going to take a break right now. We'll be back with David Williams on the other side of this commercial break. Thanks.